Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Wednesday, July the 29th. Well, a similar candle to those that we've had over the last 3 or 4 days, and this is a market that's being bought as it tries to sell off. We have a continuation of the first time frame downtrend, but the current low is only marginally below the previous low. And that shows us that the bears are really lacking commitment to force this market down. They're lacking the commitment to retrace any of this very solid first time frame uptrend that we had from the breakout of the cloud or the Kumo. Now, if we look at the shadow on the bottom of this candle and the shadow on the bottom of all of these candles, this represents buying. That's buying pressure. And every time the market's tried to trade down to these levels, the buyers have come in and pushed the market back up. The only problem is, though, the buyers really aren't strong enough to continue the uptrend on its way at the moment. But they may be. Now, what we need to do is watch the high of the current candle for a new first time frame uptrend. If we have a new first time frame uptrend and we take out that swing high of the candle from 3 days ago, then we'll have a continuation of the second time frame uptrend. What we'd have is a higher peak, series of higher peaks and higher troughs. So very important for this market to take out the high and the swing high there. Now, this type of candle is really not a bullish or a bearish candle because of the very small body. The small body means that the side that won the battle for the day has made little net gain, and because the candle's red, it means that the bears have won the battle on the day from the open to the close, but they've made very little net gain. It also means that the bears have made no net gain for the day, so it's not a bullish candle as well. So what we need is a confirmation of some uptrending action, and that's why we want the high to be taken out. Now, just looking at our other indicators, the Tenkan-sen is on top of the Kijun-sen, and that means that the market has a positive bias, and we're trading up above the cloud, which means that the market also has a positive bias because of that. Now, interestingly, the Kijun-sen has turned flat, and when the Kijun-sen turns flat, it tends to be an attractor of price action. So that's what's happening at the moment. The market is trying to retrace. That rubber band is trying to rebound, and it is to a degree, but really not strong enough. But I think there is still a chance, while that Kijun-sen is flat, there still is a chance that this market may begin to retrace. So we need to be aware of that. And the low of the current candle becomes very important. If that low is taken out, if we have substantial close below there, our first area of support that we should look at is the Tenkan-sen at 958. And then if we take that out, there's a very, very strong chance that we'll retrace all the way down to the Kijun-sen, which is at 925. Just to be aware, this level of previous resistance, this from this swing high here at 956, may turn into support for this market. It's in the region of the Tenkan-sen. So 956 could be a potential area of support because we know that support and resistance can change their roles. Here, this resistance may turn into potential support. So what we need to do if the market does continue to retrace in this first time frame downtrend is look at how the market reacts around these levels. But overall, we are in a first time frame downtrend. It's not a very healthy first time frame downtrend, and the possibility is that this downtrend will terminate and a new first time uptrend will begin.